Welcome back to another video. I've got three stocks to go over today. That's going to be Uber, Alibaba, and Netflix. Now, I have not talked about these stocks on YouTube at all before. I briefly went over Uber in a quick TikTok video, but I haven't talked about these stocks at all. So let's talk about them. Let's figure out for this week specifically which one is the best buy. Because I like all three, but I'm not ready to put a lot of money in to all of them already with the market still being at all-time highs. So let's go over which one makes the most sense to buy and why. Now, before we get to those three, let's look at today's trades, which are short-term trades. So one of them was SanDisk shorts. I opened this on Tuesday. SanDisk, of course, fell on Wednesday and then just tanked today on Thursday, one of the biggest daily movers to the downside after my alert. So I was able to make 52%. This was after taking a lot of profit already. So I came out with maybe 2,000, maybe right under $2,000 in profits. So in one trade that took about 2 days, you could have made lifetime VIP. And then we also yesterday alerted Circle. This was a smaller position for me, but this was a leveraged Circle position, so 2x leverage, which I was able to close for about 17% gains. So two massive winners. I was only risking about 5%. So worst case, I lose 5%, aiming for 15%, but I actually got filled even higher. So back-to-back wins, I was able to make thousands of dollars today, making this just about a $19,000 week for me. So another great week. All those trades are taken in VIP, but let's go over these three stocks. So number one is going to be Uber. This is one I really like, and I especially like it because we just saw Nancy Pelosi exercise her call options. Basically, she got 200 call options, and that basically means that she could buy 2,000 because we're multiplying it by 100, so 2,000 Uber shares. That, of course, depending on our fills, would be anywhere from 500,000 to $1 million. But you could do the math if you see the exact date that she did it on. But anyways, she just picked up Uber and it's fallen since then. She bought these shares for just about, I think, 75-ish dollars. It has fallen since then. It got all the way down to $67. And so below her entry, I am bullish on this stock just because we typically see these stocks that she buys do extremely well. For reference, she averages about a 70% gain when the S&P 500 has done like 12 to 25%. That's the last 4 years. She's having even better years, but that's been her average. And she is now sticking to much less trades. Instead of going in with like 10 buys per like every few months or a year, she's literally just making like 2 trades per quarter. So Uber was one of them, Intel was the other one. Intel, of course, is super, super, super high right now. I don't want to be buying, but Uber has kind of lagged behind, and they have an earnings report coming up. She predicts earnings all the time. She dumped her Nike stock right before a horrible earnings report where it tanked. I think she did the same thing with PayPal. And yeah, I'd like to be getting in right before earnings, assuming I can get in pretty far below where she bought. If we look at their price target, 42, basically 42% upside for the next 12 months. So the price target is over $100. It's in a pullback right now. I think this really makes sense, but it's not my number one favorite for this week, only because I would like it to go down a little bit more, like to where it was, like 67, maybe $68, and then it'll be my favorite bang for buck position out of these three. Alibaba, let's go over this one. This, unlike Uber, has a lot more upside. If we go down here, it's almost, I think it is just over 100% or 99.8%. So it's going, above and below 100% in the last couple days. This is off a cliff. I mean, this thing, same with JD.com. These Chinese websites that are putting up way bigger numbers than a lot of companies in the S&P 500 are trading for insanely low valuations. So the average in the S&P 500 is 2.8. This is at 1.6. Well, 1.5 to 1.6. We'll call it 1.6. Amazon is 3 to 5. Mercado Libre is 5. Shopify is 10. And then a lot of the smaller competitors are even higher than that. So Alibaba is about to get their highest revenue quarter. That's going to be Q4. That's coming up very soon. And so getting in before then could potentially be a nice maybe 20, 40, 50% gain. And then holding for 12 months, analysts are expecting 100%. So that could be great. I am definitely looking at Alibaba for a position. And then Netflix, the reason I'm actually putting Netflix on top, at least for this week, because again, I'd like for Alibaba to pull back considering the S&P 500 is at all-time highs, but Netflix looks like a great buy even more than these two for this week specifically because we are now well below where Trump made two major purchases. So we bought $1 million of Netflix corporate bonds and then made additional bond purchases in January. So we had a December purchase of bonds and a January purchase of bonds. I put it at the absolute bottom it could have been just to give you guys an idea of the upside potential here. So I'm not saying because Trump bought it's going to go up, but he bought Intel and it went up like 500%. He bought Dell, it went up 260 something percent, etc. The list goes on and on and on with his positions that as soon as he starts talking about, they do extremely well. And Netflix has pulled back a ton already. It's down 50% from the highs. Now it's got almost 50% upside. Let's see. Yeah, right below 50% upside, and it is below both. So one would have been at 90, one would have been at 80, worst case scenario. Now we're in the 70s. It was just in the very low 70s. So low 70s for Netflix really looks good as far as a safe stock diversification. Guys, make sure to subscribe, to comment if you have any questions, and of course, join the Discord. We take trades every single day in there.